Hey, it's Mac with PriceActionTradingSystem.com, and it's Wednesday. It is March 23rd. This will be our chart lesson for the day, and I thought I'd start out by showing you the daily chart. You can see we had the trend up. We had a close outside. We got a new high, and now it looks like we've definitely got a reversal day today, and we had two legs down today. We'll see that when we flip over to the 2000 tick chart, but looks like we've topped out here momentarily. Okay, sorry I had a little interruption right there. Can't even get started good here. But if we're going to reach a measured move, we're looking at going up here. But my guess is we're going to come back and test this breakout area before we go higher. That's generally what you would expect for from the price action for us to come back. But we could make a little jog down and run higher before we come back, or continue higher for that matter. But the expectation is we'll probably come back at a minimum and test this breakout area. And if it holds, then we can probably go higher. If it doesn't, we may get back inside the range, or we may continue to go lower again. We'll just have to see. It's been a fairly impressive rally, but this was a pretty strong sell-off today. And we just as I was looking at we just finally reached a perfect measured move on the intraday chart when I had just before I started the video here. But you'll see that momentarily. But let's flip over to that. Okay, I had a slight interruption there. I think we talked about the first, I don't know if we talked about any of the trades, but this was a really good early trading morning. I mean, there were several really good trades here. And notice we dropped down, we got a break and a new low, and then we started the second leg down. And really what we did was we just folded over into a flatter channel. You'll see that a lot because this is really way too steep to be a healthy trend. It's not going to last forever. Generally, when you get one this steep, it's going to fold over, and it may fold over a couple of times into a couple of flatter channels before it continues on as it continues on down. And that's kind of what this one did until we had a break, and we tried to make a new low there. We actually did get a break and new low, and we tried to make another leg down and couldn't, but those are pretty much measured legs down, and then we bounced out of there. So the first trade here, notice you got a second entry. The problem is this is not a very good signal bar. This is technically your signal bar. This is an inside bar, but this is a pretty good second entry regardless. And the fact that you do have this very bearish signal bar, if it breaks below that, you're probably going to get a scalp out of it. So maybe you risk that one. It's real early in the day, so it's right after 7 o'clock or right at 7 o'clock. So I mean, this bar closed at what time? 7:14. So it's 15 minutes into the trading day, and you may not want to risk a trade that's lower probability, but it is a trade that kind of fits our criteria. It's just a little bit aggressive. So, and then notice we dropped on down, and we just kind of went sideways and had this failed break higher that confirms that trend line. And this is like a 7-tick bar. I mean, when's the last time we could actually use the 8-tick stop rule and take a trade? It's very rarely. So, I mean, this was a really good morning. And notice that you make a new swing high, so there's a first entry, second entry. So it's a failed second entry long. Technically, it failed when it went lower right there, but because this is a little congested area, a little range, you could treat it like a failed breakout as well. So it's also a failed second entry long. It's just a little convoluted because the failure really occurred right there. So, but the small bar confirming the trend line at the EMA, failed breakout. There's just too many reasons not to take that trade. I like that trade. And then we drop on down, and then we get a true second entry again right off the key entry point. And again, this is a first entry, second entry that fails. Notice it makes a new high. So another failed second entry long, a second entry short, another very small, I think it's 10 ticks. Yeah, 10 ticks. Very low risk, and off it goes again. And there's actually another little second entry right here, but the signal bar is not good enough on mine. It's really a repeat pattern of this. You get the little sideways and the failed breakout. If you had a decent signal bar there, take that trade. On my chart, it's not good enough. But just a few minutes later, you get a first entry, second entry, and that's the first break of the trend line. Another relatively decent size bar, 8 ticks. 8 ticks, 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 8 ticks second entry. It looks like the same pattern we've seen multiple times down through here. So it's another repeat pattern. And look at it, this time people have a lot of confidence in it. You probably get a decent runner out of that. Runs down. It gives you another second entry here. It is a failure. It's not quite back to the EMA, but because of the range, it's a second entry, and so you may take that trade. It's not a. I don't like where it sets up at, and you've already had a break in new low, but a lot of times you get two legs down to a new low, so there's some reasons to consider it. I'd probably wait, especially after having all those really nice trades down through there. And of course, it does bounce here, and it gives you a perfect second entry short right here with a hugely bearish bar, way away from the EMA, and I'd say we're still in a downtrend, and really you get a triple test. You could almost argue that's a triple test across there. I mean, there's no almost to it. You could argue that it is. You can see that you come across there, you get a triple test. So there's reasons to consider that trade. The problem I have with it is you got this trend channel working up. Let me color that one just to make it a little easier to see. And you get a close, what looks like a close outside here. Not very convincing though. So that concerns me a little bit with that trade. But that far away from the EMA, that bearish bar with a triple test, you could probably take, because this is probably a range, in a bigger picture range. Wrong one. And if you come down here and draw it like so, you can see that. And so based on that, if you see that, you're probably okay taking that. And then notice we finally bounce, and you're bouncing along here. Okay, I'm sorry, I had another interruption. You probably didn't notice, but now I can't remember. I think we were talking about this trade. There were two legs up. If you look at it as a range, you could probably consider that a triple test, and such a big bearish bar so far away from the EMA. I mean, if you see it as the range, you could probably get closer to calling that one red than what we did. And of course, we run back down, we bounce. We make a higher low here, but no entry to go long, unfortunately. We come up here, we break out. And notice we test this. You really get a quick triple test of this, but more than anything, you can call it a first entry, second entry failure, but there's so much resistance right there, and this bar is not really, this was really your signal bar. The failure occurred here, so I'm just not crazy about that one. It would have worked, and notice there's a perfect measured leg up, but I don't think that one was worth risking out of that little congested area there. Of course, we run up, you make a lower high here, you get a reversal finally, pattern, but it doesn't really set up right. It should be on this side of the EMA, and it probably that probably would have still been a winner, but that would have saved you from taking a trade that obviously, and you see what happens. That's the reason you got to be concerned about the way it's set up. You can't take the lower high because it's in congestion, so I think you got to wait, and you don't want to be going long there because you've already had a break in a new high here, although you might say, hey, maybe there's another channel here like so, and you can't argue that that's not possibly that maybe that's not a legitimate channel. So, but after two legs up, you get a break, and you do get a new high, and then you turn down again. So notice we kind of go sideways here. There's some trends up and down, but you're just kind of working sideways in this range, and you get a double top here. But it's just a first entry. It is a little away from the EMA. I'm a little, again, I think it's a little early. I'd wait on a lower high, which comes here. It doesn't really trigger. And then you come up and you make another higher high right there. And so that one concerns me as well, especially with that channel still in play. Now, you could argue there's a triple test here now. And but the problem is you make this new high. And generally, once you make a new high, especially the closes close higher, you better be careful and maybe wait on the lower high, which comes here, and you don't want to go short right there at this point. I think you need to wait on something a little better, and then notice you get a triple test and a big bearish bar. that's where you want to go short. Notice you make the new high, you test it once, you test it twice, and you're making a lower high each time, and that's just so bearish. I like that one. And you would have got a nice runner out of that. And of course we bounce here, you get a close outside new low, and then you make a higher low on a failed break lower, and you're still a little ways from the EMA. So I like that one just to try to ride it back to the EMA to come back and test the breakout area. Odds are we're coming back. And of course it takes it a few minutes, but it gets back inside and gives you a, notice this is a double bottom, so that's a first entry, second entry, and then there's a first entry, second entry. It is kind of congested right there, but that's because the bulls and the bears are fighting it out, and our rules tell us that we're probably going to go higher here. So you may take that trade on the failure, on the failed second entry short and the second entry long. And of course it takes it a second, but it runs right up to where you would expect it to. Turns down, runs right down to the lows again, and then we work our way back up. I don't see any shorts or longs here that I would really want to take. Again, you get a failure here, but we're making new highs. So even though you got a break and two legs up to a new high, I would wait on a lower high, which comes here, which is not a decent setup. But then you get the reversal, and it does. Notice that not only do you have a failed second entry long, see the new high, first entry, second entry, you get a failed second entry long, but you test the resistance again, it holds, you get a relatively bearish bar, and this is an engulfing bar. So by the time this closes, maybe you don't necessarily want to take that short, but if you're, you know, as a trap, it was a failure as soon as it went below that green bar right there. So maybe you take that entry. You probably take it if you like taking, if you feel comfortable taking an engulfing bar, because sometimes they're unreliable. But I don't think you want to wait till this closes, because it's a good bit of stem on there. We're above the EMA. We are still below the EMA, which you can't worry about the EMA so much in a range. But notice the midline, we bounced once there, we bounced again, so there's a good chance we could bounce again. So you got to be careful with this one. So again, I think if you've got room between here and here, here in the lows, whatever, you probably could take that one. So that one, you may argue that one should be green, but with it probably being a trap, you'll probably get at least a scalp out of it. And of course, it bounces and breaks out again, and then just turns straight down. And unfortunately, there's not really a setup here. You do make a lower high right here, but it's an inside bar, and I don't think you want to risk that. And it's unfortunate this doesn't really set up well, because there's a really nice move down. Then of course we bounce. You get a close outside, move to a new high, and I like this one just as a failed breakout. And again, this is an engulfing bar. I don't think you can wait till here because there's not enough room. But when it broke higher and came by right here, you may take that trade. Just to trade it back to the other side of the little congestion area. And it actually goes much lower and comes back, gives you a lower high. But again, no setup there. And that one's really iffy. It's just, you're just basically trading the breakout. We bounce here, you get a second entry short here, no setup. Comes right off the key entry point, confirms it, but again, no real decent setup there. And then finally you make a lower high with a really good signal bar, and then you get a failure here, so when it breaks below that bar, it's a failure, and that turns out we really just drop right there. And the smart traders all are waiting on something that's probably a sure thing, and that reversal failure there is it's not really a reversal, it's just a failed second entry long in a downtrend at a key entry point, and it just takes off, drops all the way down to here, and you get a first entry, second entry, but that's just congestion, signal bar doesn't qualify. Then you bounce here and run up, and you just go into more congestion. You do get a triple test here with a big bearish bar, but I'm not crazy about it. But it does look how bearish it closes. Maybe you try to go short there. The better trade is just to wait a few minutes, and it breaks higher and fails and turns down. Now you got a really bearish bar on a lower high with plenty of room left. that's the better place to enter, smarter place. And of course it bounces down here again, but no setup. You do get a high or low here. That's too congested in my opinion, and you run up here and you get a second entry short. Now again, I didn't mark this one just because of this channel working up, and we did make a new high here. So again, you're probably better off to wait on a lower high, and that comes here and not a very good setup. And then we break higher again. No setup to go short there. There is a lower high here, but being above the breakout area of the range, there's too big a chance it bounces again and goes higher. So if you just wait a minute, then you get a failure here, and then you get a break and make another lower high than this high and this high with a big bearish bar. So we're probably going to head to the other side now. So I like that one. That's a pretty good move down. And notice too, you get another first entry, second entry. This is a new swing high. It's higher than that one. So first entry, second entry, it fails. Fairly bearish bar. It's also a second entry short. And you can see that's a triple test of that midline. Relatively bearish bar, relatively low size, 9 ticks. That's a nice setup. It's a shame you only get a scalper. You could actually get a couple of 3 points out of that, but it's too bad you didn't get a runner or something out of it. But then we bounce, come back to the top, and that really takes us into 230. There's no setup here other than maybe this bar, and it's just a little bit late. I mean, if you took that trade, as long as there's enough room back to the EMA, just being barely after 230, I wouldn't be too concerned about that. You may take that trade, and that pretty much closed out the day. So, but yeah, this was a great start to the morning. I mean, there's just several easy to see second entries right off a key entry point. I mean, we hadn't had a trend like that with those easy second entries, that many in one trend in a while. So, and small bars on top of that, low risk bars. And notice that we did find a perfect measured move down here this evening. So there's 15 minutes left. I doubt we're going to make a new low at this point, but possible we could go lower. But that's as good as it gets on a measured move. Can't beat that measured move. It's perfect. So anyway, you can clearly see the two legs. You get first leg down, then a two-legged correction, and then a second leg down. And this two-legged correction came up short, which gives you a hint that we're probably going to get another measured move down. So this morning when I posted the chart lesson, it was really kind of hard to know whether we would going to have a range day or maybe even try to test the highs again. But that's really bearish. So if you come up short and suddenly start trending lower, you had to almost assume that we probably were going to try to make two legs down. That's kind of where I was leaning this morning, and in the end I was right on there. So that's exactly what happened. So anyway, I'm not going to beat around the bush and drag this out anymore. I'm going to wrap it up. We'll be back again to do it tomorrow, but I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.